Welcome back, everyone, and good morning. I want to cover a very important topic in this video. If you don't know by the title, I'm talking about the macros. I recently made a short and I saw that it got a lot of attention. So I kind of wanted to dive into it a little bit more because I know that was it's a very common question. It's a very common thought to have as well as we go through the motions of this year and kind of figure out what type of tone that we're going to have now that we've missed CPI and the market seems to be appropriately pricing that in. It's natural to think, okay, well, what are the odds that we're going to retest some of those levels? What are the odds that we've already seen the lows of these assets, and what can cause us to retest those levels or possibly go lower? And I want to make a case that it's very likely that we've seen the macro lows. And for those of you who don't know what that means, we all assets typically trade from buys to sells. It's not a straight line. There's people and there's institutions on the other side of those buy and sell orders. There's a person on the buy that sell order. So whether you buy an asset, if you buy Bitcoin at 20,000, someone sold it to you. And if you sell Bitcoin at 25,000, someone bought it from you, right? So there is a push and pull that's consistently going on in the market. And what we will have in the macros is we'll have the ability to shock those markets and kind of cause a disruption there, a fear. People will not only sell or dump out of fear, but they'll also say, okay, well, I'm not sure if this is going to go lower, so I'm not going to buy. And in extreme cases, you can even see it may even take orders, not for crypto really, but if you're talking about like stocks, or if it's not a popular one, you may even see a delay in those orders getting filled, because it's not just like the broker has to buy these assets back off of you if you sell. So going into the macros here, the macro is when you're looking at macro lows, what you're looking at is, okay, what has happened that kind of caused us to see the lows that we have thus far, and how likely is it to test those lows again? And I want to make the case. We saw peak inflation I believe, we all know inflation was actually higher than this, but we saw peak inflation, quote unquote, at around 9.1%. We saw our gas prices exponentially higher than what it is right now. We saw the mass uncertainty. We saw the Feds absolutely denying that there was inflation to begin with. We saw the Feds consistently miss multiple CPI reports month after month after month after month. We've seen them grossly underestimate this entire thing, remain behind the curve. We've seen inflation come in hot several times. We've seen them not tighten enough initially when they did want to admit that the inflation was pretty much present. We've been through a lot here, and we've seen kind of like these prices here. We've seen the low of Bitcoin, Ethereum, Cardano, Doge, any of those top 10. We've seen a lot of those lows. So the question is, are those the extreme lows that we're going to see here? And are we going to kind of establish support here? Not necessarily we're not saying that we're going to take off within like the next month or so. Obviously, we still have some more work to do on inflation. We just recently missed again, but is the extreme side of it over? And I want to make a case saying that it is very likely that we have seen the macro lows. And before any of you jump into comments and stuff like that, I want to just kind of think what would cause a disruption for the more severe than the macro lows that we've had thus far. And the only things that come to mind when this happens is, let's just say, in which we are projecting a recession this year. I understand that. I've made some videos on that. But let's just say that we have already over tightened, right? And we do go into the recession levels. We have strong evidence, even as investors, that we're looking at these assets, whether that's just stocks as well. Like even if you're looking at something like Tesla or SPY, if Bitcoin drops below 14K, that's a buy signal. If Dogecoin drops below 6 cents, that's a buy signal. If Tesla drops below like $100 on 103, that's a buy signal. If SPY drops below, was it like 360, 340, that's a buy signal. And we've set these lows in there already, saying that, okay, well, obviously at these prices, we've seen the power of this reversal within a very short period of time. There will be a lot of buying pressure in there. We would need an extreme level of panic to break those levels and to really sustain being at those lows. I'm making a case for this because we've seen those lows with the news that we've already had on the macro levels, and we pretty much recovered relatively quickly from those levels, despite there not being overwhelmingly good news to recover from them. And let me remind you that we have not printed money coming up this month, March, April, roughly. We have not printed money in almost a year. So this is not necessarily the government injecting money into the markets to kind of prop it up. And I do want to point out another fact is that Powell recently said in his last FOMC meeting, he said that they have measures that if they've pretty much over tightened, because he didn't want to pause or roll back the rate hikes and then have to come back a couple months later and say, okay, well, we got to start hiking again because we're not done. Powell had pretty much said that we have, and I quote, tools to deal with over tightening, or if we send the market into a recession and find out that we've been too aggressive. And the only tool that they have to deal with that is pretty much printing money. So he's already alluded saying that, hey, if we send the economy into a recession, if we've indeed been too aggressive, we're not above turning the printing press back on to get us out of that recession. And we've seen this kind of happen back in 2018 when this is back when Trump threatened to fire Jerome Powell when they tried to stop printing money back then. And you can take a look at the charts, take a look at the last 5 years on the chart, and you'll see 2018, you'll see like SPY, NASDAQ, you'll see them pretty much fall off of a cliff at the panic of them stopping printing money. And after that convo happened, and they're like, okay, you know what, we're going to keep printing money. And then you see, boom, right back up, literally a V-shaped recovery. And we also seen in 2020 when they started printing money even more aggressively because of the pandemic, we saw the shortest bear market in history, roughly about 3 months. So we have several catalysts here to say that, okay, we've been through the extremes. It's unlikely that inflation is going to soar above 9.1% again. It's unlikely that the Fed won't take action and print money if we do go into a recession and just allow us to sit there for 2 or 3 years. In my opinion, we've already been in a recession, but I guess it's not necessarily 2 negative quarters of GDP. It depends on the job market and a lot of other catalysts now, I guess. But in my opinion, we've already been in one, but a lot of the indicators that we use are lagging indicators. So typically what will happen is later this year, around like third, fourth quarter, they'll be like, hey, you know what? We were in a recession in first and second quarter. Can you believe that? So it's one of those things that we have more than likely seen the shock value that has been around the maximum levels. It's a very strong likelihood. Now, on the flip side of that, can something catastrophic happen and cause mass panic and have us pretty much break those levels and maintain and make a lower low, to say the least? And yeah, I mean, certainly we can go to war. I know, there these Chinese spy balloons, all that kind of stuff. War will certainly cause mass panic. If we've severely over tightened, the biggest catalyst that I believe no one is talking about is the housing year-over-year numbers that are getting ready to come out, and the panic that can potentially set in amongst people who are getting ready to retire. And so I believe those numbers, at least from, I'll say, March through August, they're going to be absolutely disastrous. But overall, I don't believe that unless some new information comes out with the recession and we've severely over tightened and the Fed is slow to act, because we've seen that from this administration in the past. If they're slow to act with printing money or their countermeasures, that can cause mass panic and we could potentially see some lower lows. But I do believe that as far as for inflation is concerned and the sell-offs that we've seen and what drove those sell-offs, it's unlikely that we'll see something parallel to those again and see something that will cause fear enough for us to equivalent a 9.1% inflation rate. So it's very likely we've seen those macro lows, but again, it's also that percentage of information that's out there that's unknown. I'll put it that way. So I'm not saying this is definite, but it's just saying that for most of you, I'm pretty sure you have your buy signals, and I think you'll agree with this, is that if Bitcoin retests, let's say 14, 15 grand, and if Doge goes back to 4 cents, right? Most people will take advantage of that just for the sheer, um, even if without a bull run, right? Let's say you buy Bitcoin at 14, 15 grand and it goes back to 25. That's 10 grand profit. Let's say Doge goes back to 4 cents and then it doesn't take off again. It just goes back to 8, 9 cents. That's 100% profit. And I think a lot of people are going to have that mindset when you start testing the lows here, all-time lows of these coins since the bull run. And I think that'll kind of alleviate some of that sell-off pressure. So let me know what you guys think in the comment section. Have we seen the macro lows? Does this make sense at all as far as the macro lows, or is there something out there looming that can shock the markets and cause us to make a new lower low? Let me know your thoughts in the comments. A quick side note here is I have launched what I believe to be the best community on the internet. We're going to be covering everything from technical analysis, chart reading, options trading, entry exits, pretty much how to navigate the market, how to go in and make money every day, every week. And we're going to have a community of like-minded people, all kinds of hours on tutorials, everything from whiteboards to Discord groups to weekly meetings, courses, all that good stuff. We're all going to have inside of this group. And I'm going to be launching it to the public. And I have a link in the description section if you want to get on the waiting list, and you can check that out. And this is going to be invite only for right now, but I have a link in the description section if you want to get more information, and I will send you an email and you'll be on the waiting list and you'll be one of the first people to know when this goes live. Like this video if you found any value, subscribe to the channel if you found any value, and I will see you in the next one.